Hey guys, regular or semi-regular mortgage and property update. Big one this month. Obviously we've had an election, some good news coming out about interest rates and house prices clearly starting to stabilise and a little bit more excitement out there. So let's pull it back to maybe start with the election. So clearly we've got a new government. What that looks like, we're quite not sure yet, and I guess we'll figure that out over the next couple of weeks once all these special votes are in. There's no silver bullet there, so what's going on in New Zealand's going to continue. You don't have a change in government and suddenly everything's okay again. I think what we can expect to see is improving confidence, so improving business confidence, and perhaps in some areas improving consumer confidence. I think it will certainly feed into the housing market, and I think home buyers and property investors and people with big mortgages will be certainly feeling a little bit better now than they did a couple of weeks ago. The reality is our economy is not in great shape. Expect Winston Peters to play that up big time during the coalition discussions. But the reality is, it's not great. We've known that for a while. I think at Squirrel, we've been talking about interest rates decreasing next year as a result of a weak economy. We've started to see that coming through. The inflation number was lower than expected. And I think that's a reflection of the softness out there in the economy. And if you think about it, and this is again is a discussion point that we've had out there for a while now, for mortgage borrowers, interest rates are still increasing. So we're still in a tightening cycle here where borrowers are reducing their spending and having to adapt to much higher mortgage rates. That's still going through. I had clients in the last week or so who are coming off 2.9% rates still, and having to find ways to pay a mortgage at 7%. So we're not fully through this yet. We're still in a tightening phase, and now we've got a change in government who's going to be more fiscally responsible. So they're not going to be spending as much money, so there's going to be less fiscal stimulus out there. The potential for restructuring of parts of the public sector, so potentially redundancies and stuff coming through as well. So it's not all that great. If we take a step back to GDP, there was this headline that said, we narrowly avoided a recession because growth was close to 0%. Look, that's ignoring the fact that we had 100,000 people come into this country in the last year. So if you look at this on a per capita basis, Kiwis are getting poorer. Our wealth as a percentage of GDP is getting worse. Our incomes, per capita are getting worse as well. So the economy is not in great shape. Yes, the new government's focused on that, and we can expect to see over the next 12 months a lot of policy orientated around improving the economy. But there's no silver bullets here, and this stuff takes time. So when we think through what does that mean for you guys as homeowners and borrowers, I think from an interest rate perspective, we're seeing more and more evidence that we're at peak market. The next move will be down, in my opinion. It's really just a question of timing. My view is with the weakness in the economy, that could be as early as middle of next year. Don't expect to see economists and even the Reserve Bank talking like that. They will tend to talk rates up until they drop them. So most economists are still picking towards the end of next year or even early 2025. If you've got a fixed rate maturing and you're really worried about servicing and rates, then maybe an 18-month or a 2-year fixed rate gets you out past that period. If you're feeling comfortable with your ability to service your mortgage, you've got a view that's more consistent with mine, then my view at the moment is fixed for a year. And we should be on the other side of this. As far as house prices are concerned, I think you're going to see a bit of a resurgence in the market with the big house price falls that we saw, particularly in Wellington and Auckland, with prices down about 20%. I think there are certainly plenty of buyers out there that feel increasingly it's a good time to buy. You're going to see more buyer activity in the market. On the other side of that, though, we've got a lot of people who've been holding off listing their property for sale for the last year and a half because prices were down so much. So I expect to see a lot more listings coming into the market as well. So yes, an increase in demand, but also an increase in supply. So I don't expect it to move house prices much at all. There's going to be some volatility out there. There will be some price movement. There will be some recovery in prices, but there's a lot of moving parts here. And look, fundamentally, interest rates are still high, which means that people are struggling with affordability. They're struggling to borrow lots of money. And that is going to hold house prices back. So I'm expecting more activity in the market. I think it's going to feel more like a normal housing market. You're going to get a little bit of recovery in those house prices, but I'm not expecting this to get away on us, especially with interest rates as high as they are. That's the update for us this month. Cheers.